everybody, and welcome to the 32nd edition of LM's Weekly Wrap, our weekly program to cover all the developments relating to the market, what is happening in the domestic markets, international markets, the repercussions, etc. With me today is Jash. He will be guiding us on the international developments, global developments, as well as the domestic markets. So Josh, it's been a kind of a tough week for the markets.
Yes.
And what is your view about the markets going forward?
Thank you, sir. It's great to be back. I'll start with the Nifty levels. I had mentioned that 17,800 was a very important level last week. If it sustains, we could see some bounce back, but it clearly did not. We are seeing further downside, but I think the other next point over here is about 17,600, or 17,500, where we can see a bounce back over there. But I think we should remain cautious. We see selling pressure over here, as I mentioned last week, that FIIs are shifting to China. But this week, if we see, the FII selling has reduced, and whereas the other emerging markets have moved up by 5 to 10%, India has corrected by 7% from the high of 18,888, which was in December. So we have gone in line with our 40% premium trading levels from the earlier 50% levels. So I feel India is again becoming attractive, but I think it's too soon to say. Going back to the global developments, USA, which had caused the havoc in the last 1 to 2 weeks. Basically, there are PPI, CPI, the job data, and the retail sales, which were strong last week, have remained strong this week also. So that means the markets are factoring in the 5% level rate hikes, as they clearly want to remain at 2% inflation. So the markets have again gotten jittery, and we've seen the US falling, the Dow Jones and Nasdaq by 2.5% on Wednesday, Tuesday and Wednesday and Thursday. Tuesday was a holiday for US. So what I would say is, and the other factor being that if you see the unemployment data of US, the filings in the last week have reduced, which means that the economy is resilient and very strong. So there have not been any filings for the unemployment benefits by the country, by the citizens. So I feel that is a part of fear for the US market over there, as that will definitely lead to more rate hikes, if not at least stagnate rates. So I feel we should remain cautious. We have been on a losing streak in the last 1 week. I don't know how far it will go down, but and I don't know how fast it will bounce back also. I think we should keep investing, but very cautiously. We should start buying the bigger shares which are on attractive valuations, which of course Nirav will throw more light upon. And this ends about the global scenario and our domestic scenario. I'd like to hand over to Nirav, sir. Thank you.
Yeah, thank you, Josh. Yes, the commentary from the global markets is one of caution. We had a couple of retail measures like Walmart and Hometown, and they have indicated, they have flagged their concerns about the strength of the US consumer. They have indicated that the inflation continues to remain quite sticky. And more than that, on the domestic side, we had the Monetary Policy Committee meeting minutes, which were published yesterday, and they spoke about that the inflation outlook is one which continues to remain a cause of concern. It remains mixed, and at this point in time, the inflation continues to be the sole biggest threat to the macroeconomic stability. The MPC minutes have indicated that the spending spirit in the consumer remains one of abundant caution, because the consumer can sense the inflation is just around the corner. While the inflation has peaked, it continues to be at higher levels. And price stability is something which is very, very important at this point of time in order to sustain the economy, or it has a potential of slowing down the economy substantially or it can potentially derail the entire economy. Now there are certain external factors as well as internal factors to this. The external factor is the oil factor, but crude oil has behaved so far, so not big concern at this point of time unless the geopolitical tensions flare up. And the second is the agri side. While we've had some record output in terms of wheat and oilseeds, but the harsh weather, we've seen the heat wave alert across the country. We've seen that there's going to be an early onset of summer. So I think these all are warning signs as far as the Rabi crop is concerned.
I think very correctly pointing out that the El Nino effect.
Yes.
If this sets on to India, we are going to see a deficit in monsoons.
Yeah.
And as Nirav rightly said, that Rabi crop sowing is going to take a hit because of that.
So we are towards the fag end of the Rabi season, but I think this early onset of summer is something which the government is likely to take all the precautionary measures. During this week, the government has invoked the emergency clause also, by virtue of which the coal plants will be forced to procure more coal during the 3-month period starting from March 16th till June 15th. So during this 3 months, the government will ensure that adequate power is made available to the entire country, because it's going to be absolutely peak season. As a result of this announcement, we saw the power stocks move up in trade, whether it is the like of Tata Power, Adani Power, or Torrent Power, or IEX for that matter, NTPC. So most of the power stocks have gone up on account of this announcement. I think this was one very important development which took place during the week. And as far as the markets are concerned, from a sectoral point of view, starting off with the auto sector, I think markets are cautious ahead of the monthly auto sales numbers for February, which will be coming next week. So there will be a trigger for the auto stocks. Overall, auto stocks continue to do well. Tata Motors and TVS Motors could be in the limelight because they have plans to raise funds for their EV ventures, that is the electric vehicle ventures. They want to do some fundraising over there. Secondly, we have auto ancillaries. Auto ancillaries continue to do quite well on the back of strong demand from the auto sector. We have in banking, we've seen significant pressure despite the fact that banking has outperformed on the operational front. This is because markets are expecting the next quarter to be challenging. The cost of funds are likely to go up. There's going to be a lot of competition in terms of raising deposits. So I think the PSU banks have started showing weakness already, and a lot of banks, NBFCs, have essentially come under pressure on account of this development. Plus we've seen FII selling also in the banking counters. Capital goods continue to do very well. I think the prospects look very strong, whether it is Siemens, Thermax, Cummins, ABB. All of these stocks continue to do very well because of the thrust of the government spending. We have FMCG stocks which have been largely quiet in the market because of the muted rural demand and input cost pressures. We have the pharma space, which is also essentially a lot of stocks in the pharma space have also hit 52-week lows, whether it's like of Laurus Labs or Biocon, etc. We've seen Cipla, which was one of the biggest losers during the week because its Pithampur facility got some US FDA alerts.
Correct.
So Cipla are under pressure over there. And as far as one other stock which has been under pressure, persistent pressure, is Asian Paints. The stock was down about 3% in trade yesterday, and I think the winner of this week is again ITC. We've seen very good momentum in this stock and all-round performance as far as the quarterly results are concerned. This week, the biggest gainers were GAIL, NTPC, Coal India, ITC, as well as Ultratech Cement, and some of the biggest losers of this week were the metal stocks. Today we are seeing a huge amount of sell-off in, and I think a kind of breakdown is being seen in the metal stocks from the way we are reading the numbers, whether it's Hindalco, Nalco, Vedanta, SAIL. We are seeing a lot of weakness in the metal counters. Technically also charts are indicating some kind of a breakdown for the metal stocks, so I think abundant caution is required over there.
What I feel is, as far as metals is concerned, we are seeing the inflation that has to be controlled, that is going to impact the inflation.
Yes.
I'm sorry.
Yeah.
The inflation, to control the inflation, you're going
You
to
have
see
to
a
cut the prices.
Yeah, cut the price and slow down in growth of metals also. So
True.
that is what we are seeing over here.
And so I think fair and square, what happens is that with private sector companies restricting their capital spending,
Correct. That is
going to be the government which will have to do the spending in the economy. So what government has indicated, 10 lakh crores to be spent on development projects, 2.4 lakh crores to be spent on railways.
But of course, government projects are low on margin, so that is where the private corporates are seeing the hit over there. Exactly.
So I think to sum up, time constraints of course do not permit us to go any further, and I think it's going to be a difficult road for the markets. I think it's better to be on the sidelines, because we've seen a lot of sectors. There's no sector leadership at the moment. At the same time, no sector is willing to give any positive cues or support to the market. We are also seeing some turmoil in Adani Group related stocks, and that continues. The market cap has eroded from 20 lakh crores to 7 lakh crores as we speak at the moment. So I think abundant caution is the need of the hour. Wait and watch approach will work best.
I think most of the big financial houses, and even as we say that this is the year of the debt.
Yes.
So if you have investments in debt, continue that, and I think you should shift from debt to equity in a staggered manner in the next 1 year. You should accumulate. I think this is the time of accumulation more than caution. We would definitely say cautiously accumulate all the equity portfolio that you want to build, and I think that sums our summary.
So that kind of sums up our program. If kindly revert back to us with your feedback on our program, and I'll hand over to Jash for the closing comments.
Thank you, sir. Like, share and subscribe. Please press the bell icon to hear from us regularly, and download our app LM InvestSmart. You get all the updates of our research calls, and you can easily, smoothly buy and sell stocks over there. Thank you.
Thank you very much.